All right. Hey, everybody. How's it going? Happy Friday. This is Finance Friday. I'm here with Jim again, and Amy is not here, so we are filling in. So this should be fun.
Should be fun. Should be fun. Yeah, this is not my gig, so I'm here just because Amy's not.
Yeah.
So I wanted to, first I was looking all day. Like if you were to look for that sound, when you go to YouTube and you look for that sound that says, the dun, 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 dun,
Like the Star Wars?
No. Oh, I guess that does sound like Star Wars, but no, I was thinking more like a funeral or
like Here Comes the Bride, like.
But not here. No, but like a really somber. Because I wanted to give a moment of silence, but I thought it'd be more funny if I could find that sound, but I couldn't find it.
Okay, so what's the moment of silence?
Well, your mustache is gone, so it's
gone.
It's no longer with us.
A little bit cleaner this week. I appreciate that shout out.
Well, it was funny. I said to Ryan, I just said today. I yelled from the other room, and I'm like, what did I say?
Did you shave your mustache?
Did you shave your mustache, or am I just getting used to it?
Yeah.
Because I didn't notice that if it was there or not. I didn't. Usually it just jumps right out at me like, oh, there's a mustache. And it didn't do that this week, but I just realized it today. Yeah. And Ryan said it's
been gone all week.
Yeah, all week.
So.
And I just noticed.
No one pays attention.
But Amy will do that too. She'll get her hair colored or cut. And she'll be like a week later, she'll be like, did you notice I, did something to my hair? I'm like, oh.
Yeah.
Yeah, it looks good.
Yeah, no one really noticed it. But,
Were you sad about that?
Not really. I was just surprised because so many people made comments about it being there that I figured that when it was gone, it would be a little bit like people were like, oh, it's gone. So
yeah. No,
but it is what it is.
It is what it is. So last week we did the stock draft, which was a lot of fun.
Yeah.
And I feel really good about my guys.
Yeah, I feel good too. I mean, today was a little hard, but
I don't feel good about Amazon. And with full disclosure, Amazon is our number one. Actually, maybe not anymore because Lockheed was right behind it, but and Microsoft. But Amazon's our number one holding at Nova, and I think we're gonna start. I don't want to say trimming a lot, but I think we're gonna lighten up a little bit because once a week we grade our stocks and it's on a 10-point scale. And Amazon for a while was a buy, even a strong buy, and it's been a while since it's even been a buy. It's now somebody trying to break in. Hello?
It's just me.
Oh.
What's wrong? You guys can't get it?
No, we're good. We're on.
Oh, we're on.
We thought everyone was gone.
I was about to pull out my 9. That's a gun if you didn't know. So don't sneak up on us. Anyway, yeah.
I mean, Amazon, we'll see what happens. I mean, I know that there's some stuff that, they like the one-day shipping is hurting them a little bit. And
we talked about that yesterday. Why don't you talk about that for a minute?
Well, I think, just Amazon's rolling out this one-day shipping, and so it's increasing, I think, their costs a little bit. But I think it's just a little bit of growing pains, to be honest. It might not be a great by the end of the year. That pick in our time frame may not be good, but I feel good about Amazon, especially long term. I think that, a few years ago, people would have thought they were crazy for saying 2-day shipping was going to be something that they could roll out. So, I think it might be a little bit of a growing pains. They'll get it worked out, in my opinion. I think
long term, of course. I mean, they're Amazon. They're going to be.
But between now and the end of the year, maybe it was, we'll see. We'll see what happens.
The problem is Amazon is down, and this is before today's pullback, and I think they got hit pretty hard, didn't they?
They were. Yeah, today was all of my stocks got hit pretty hard today.
Well, all stocks got beat up. But
they were down, 3% today. No, today 2.5%. So right about what the market did.
Okay. So I updated the playbook before China announced that they were going to flex a little bit on us today. Going right before this pullback, we were actually up like 150 points, I think, at one point. Amazon at that point was down 11% from September 30th. So coming up on a year. So for the last 11 months, they're down 11%. Year to date, they're up 19%, but they gave so much back in the fourth quarter.
Yeah, which again was part of why I felt like it was a little bit of a value. We'll just see how it goes. I mean, we're going to see a little bit of volatility here, and I think, unfortunately, I think a lot of the tech stocks will be, especially I think Apple might, if these tariff things don't get worked out, Apple might also be kind of pulled down with the ship. So, but there's time, and we will see how it all shakes down over the next couple months.
Yeah, Apple's greatly tied to China, maybe more than anybody on the
I think
playbook.
they're definitely mostly tied out of anybody. I think we really look at, but I think that they've also talked with Trump about it, and that's one of the reasons why Trump lessened the tariffs last week, and decided to put a hold on those. So hopefully there can be something worked out. It definitely looks more like a little bit of a food fight now. They're throwing stuff back and forth at each other.
Right. I'm tougher than you.
Yeah. Which
No, you're not.
At the end of the day, when it comes to this, I think nobody wins. In
the short term, nobody wins. But make no mistake, we are going to win the trade war.
Yeah, no doubt about that.
We have a bigger stick, so we're going to win.
Yeah,
as long as we just stick to the plan.
Absolutely, and Trump is kind of calling for anybody that's in China to start relocating. So we'll see what happens. Obviously relocation will have some short-term costs to it, but long-term, if we can continue to stay strong, I think as a country, the U.S. is definitely in a better position, and it's in our best interest to kind of level the playing field. It's been unfair what China's been doing over the last 20 years, 30 years.
Yeah, 35 years.
But in the short term, it's going to cause volatility every time a tweet comes out, every time China decides to say that they're going to put tariffs on our, $75 billion worth of goods. It's not even that much. I mean, comparative to what we bring in, import from them. So they just don't really have much of a, they can act like it's a big deal, but it's really, they don't have much of a hand to play.
Yeah.
We're playing with a flush and they're playing with a pair. To play poker terms. So that's that.
We need to get like a one of those filters on the screen to make you look older, because I'm looking at myself and I'm like, holy shit, do I look old? Like, that's really why I don't like to do these videos. I don't like to see myself.
Well, you look skinnier again though. Because I remember months ago we came on here and you were like, "Oh, I feel like my head's round."
Well, when I came
kind of
it goes right to my face. I just get this big fat ass head. Yeah.
So, but you got it's more oval shaped now.
That's good.
Less round.
Yeah. Although because Amy was in Chicago. She's still in Chicago today with some of our 401k companies. Right. So she's been gone most of the week traveling, and it's tough for me to work out. Like, I usually work out in the morning and at night on the elliptic. No, what's it called? Exercise spin bike.
Oh yeah.
And it's been tough this week, so I haven't worked out as much. And I went and got one of those ice cream cakes too.
Oh,
I did.
Oh gosh.
There's a place on Bonita Beach Road. It's Christie's or something.
I don't even remember what it's called.
If you're coming down Bonita Beach Road to come to our office, it's on the left.
Amy said, "Don't blame me."
I'm blaming you. If I'm not heavier though, somehow I'm not heavier. But I, on the way back from probably lunch, which I had, I wasn't good today because it's Friday. Isn't it funny how you
justify it?
Yeah. Well, it's Friday.
Yeah.
So I can.
It's Friday and tomorrow's Saturday. Sweet Melissa's.
Yes, that I did. And Beth, I didn't stop and get any more because I thought if I did, I would probably order another one for me for later. So I went in, I got one, and I wasn't going to tell anybody because I didn't want Tamara to yell at me again, because she does that a lot.
But here we are.
The
guilty conscience
hopefully
wins.
she won't watch. I don't think she's watching.
No, she's probably in the car.
But getting back to the market, so I just thought it was interesting because I was just talking to a client before this Facebook thing here, and did I just sound old there by saying that, this Facebook thing?
I mean,
the Twitter.
Not with Facebook is for older
people
in
anyway.
general. Yeah.
Yeah.
So.
But the S&P 500 since September 30th is down like 2.5%. The market is down 2.5%. So I had a client say to me today, he said, so, is now a good time to just buy dividend paying stocks? And I still don't think so, because I think when the market does bounce or go up, those dividend payers aren't going to move.
Right.
And not to mention, over the last 5 years, companies like Bristol Myers and General Mills and, dividend payers haven't done well at all. They may have paid 3.5%, but they lost 30% in share price.
Right.
So what are your thoughts on dividend payers?
I think in general, I don't think I agree. I think some people are wanting to move to dividend paying stocks, thinking it's a safer place to be.
But it's not.
Especially with the type of volatility we're having, isn't really like sector related. It's kind of the whole, everything's kind of being pulled. Because it's based on news.
Yeah.
So we're still seeing growth, maybe a little bit slower growth, but we're still.
Explain what is. You have to be more specific, Amy.
What that is. Dividend?
What a dividend is? You know what? Let's stop this discussion and talk about getting out of debt. So everyone, you shouldn't spend more money than you make. This is what Amy wants us to talk about. What? Explain what? Dividend payer.
So a stock that pays a dividend. To basically a profit that the company makes, it pays out a portion of it to the stockholder instead of investing it into R&D or areas where it can grow. That's basically what a dividend is. Yeah,
dividend companies are typically they're perceived as safer. Dividend companies just return profits back to the shareholders in the form of a dividend. Usually with individual companies, it's paid quarterly, and like a decent dividend, like the S&P 500's. The S&P 500 companies' average dividend is like 1.9%. So it's not a lot, but in a common mistake that a lot of income people make, people who are looking for retirement income, is they'll buy a lot of oil and or energy type companies that are paying like 5 to 6%, sometimes up to 9%. But those companies are paying a dividend, but they get hammered.
Right.
Like they're down 50%.
Yeah.
So chasing dividends is not, at least chasing dividends in the oil sector is not a good place to be.
Right.
But that's what a dividend is. It's just a return of profits to the shareholders.
Yeah. I think the root is to go into maybe talk a little bit about why we think the volatility is, because I think that will kind of shine a little bit of a light onto why we believe that maybe something in maybe a dividend payer, something conceived to be or considered to be more safe, isn't necessarily something that we're looking at. So do you want to explain a little bit of why some of this market volatility is happening?
It's simple. It's well, there's two main things right now with the market. It's the 10-year treasury and the 2-year treasury right now. What's that?
Friend from college. Thanks, Taylor.
Draining threes.
Yeah, basketball.
You've never drained a three in your life. You kidding me?
Anyone that knows me is laughing at you right now.
Really? Is he good at basketball, Taylor? Come on.
I haven't played much since I tore my ACL, but I used to ball.
Really?
Yeah.
So you can shoot?
Oh yeah.
Yeah.
Mm-hmm. But anyway. So the two main things that the market is kind of scared right now from.
So the interest rate environment right now. So the 10-year treasury should pay more than the 2-year, meaning if you're going to invest your money in the government for 10 years, you should get more than a 2-year should pay less. Like a 10-year CD should pay more than a 2-year CD. And right now they're about the same, and at some point over the last 2 weeks, the 2-year actually paid more,
right?
Which is a bad sign for the economy, and usually
it can be right? And sometimes it can be an indicator of future recessionary times. But there's a lot of other things that like globally as to why we're getting a lot more kind of flood into our interest rate market. Like the fact that there are treasuries around the world that are paying negative interest rates.
Oh yeah.
So that's causing people to want, we have the highest interest rates in the world right now.
Yeah, we're the best. What's the saying? We're the best house in the bad neighborhood. Something like that. Like there's nowhere else to go.
Yeah.
Like I was with that client I was just talking to. We're talking about, he's like, I don't think this market's going to do much, and I don't know if that's. I don't know. I mean, over the last 11 months, the market's down 2%, but I do know that the U.S. equities are the best place to be right now because these companies are still making money. We're buying companies that have good earnings and consistently beat their earnings, and eventually we're going to win. It's just as soon as this whole, because the other, interest rates is an issue, but also China.
Right.
That's all this is today. The market's down 600 some points today simply because China said they're going to do tariffs September 1st, I think. So what? I don't even care.
People don't even know what that means. So they just hear it and they're like, oh, China again, and then they just kind of sell off. But there's definitely some electronic trading. There's some algorithms in place because I was actually watching it this morning when I was at the gym, and they went to commercial and it was up 100 points. The future, the implied open. They came back from break and it was down 100 points.
Yeah, I saw that.
And so within 2 minutes, the market just kind of exploded right after China made that. So it happens quickly because there's more electronic trading happening. So we're kind of seeing that a little bit quicker, but people just hear something about China and see you later.
Yeah.
It's like, Trump tweets, see you later. Like there's really no news is good news at this point when it comes to tariff news, I think, until there's some type of like a picture of them shaking hands.
Yeah, or another tweet
or
another
hugging,
tweet saying, "Oh, we're gonna push it out another 2 months."
Yeah,
and then the market will take off 500, 600 points.
Yeah,
so it's just noise. Buy good quality assets, and they will appreciate. It's that simple. It'll be fine. This is noise.
Yeah.
This is just. And Steve Leisman, who's on CNBC, I hate that guy. I mean, he's awful. He's just awful. Let's talk about where we all stand, the three of us. Can you pull that quickly?
Yeah, we'll finish off with that. It's already been 18 minutes. Can you believe that? That's just chatting away. So all right. So let's see.
So last week we all picked three stocks. Amy, Ryan, and I picked 3 stocks.
Right.
And I hope I'm winning. I've been winning all week.
Yeah.
I plan on going wire to wire, by the way. I don't plan on giving up my lead. So I really hope you don't. Go ahead.
Got it. So Amy is down 0.78%.
0.78% to the negative, which isn't bad considering the market just came back.
And it was pretty much today.
Yeah.
So that's 0.78.
I can't write this down somewhere. All right, so yeah, that'd be great. I want to post this. I got one right here.
Oh yeah, so I was gonna give you a blank one.
All right, so Amy
is down 0.78.
Oh, she's down?
Yeah. I think we're all down.
7-8%.
You might not be. You were up okay.
All right. So, oh shoot, are they looking at that backwards?
No, I think they can see it.
All right. Oh, we'll
I don't know.
soon find out.
We'll
all right,
see.
Go ahead.
So Amy's down 0.78. Jim is.
Come on, just be positive.
Jim, it's loading.
Loading.
Down 0.08. So you're only down out of $100,000 $79. So that's pretty good.
That's not bad.
And I'm down like 1 point something.
1 point something.
Yeah.
Oh, Ryan.
Yeah. Well, Apple.
Well, 1 point what?
1.1.
1.1 what?
2. So 1.1.
1.12. All right. Damn it. I just needed 0.8. I could have been positive.
Yeah, Apple was down almost 5% today. So that's where that came
the company.
From. So we'll see when they decide to push off tariffs again. Because this tariff, China putting tariffs on our goods doesn't do anything to Apple. so people are
Right.
expecting retaliation. So that's why. So when Monday comes around and everything is kumbaya, Apple will be up 5%.
Yes. So I will be on this again next week because we're going to pick our final 3 stocks.
Yeah, which will make it interesting.
It'll be very.
It'll spread the field a little bit.
It'll see because I think TMO. You picked Thermo Fisher, which is another company we absolutely love. And they're actually up 15% since the end of September of last year, but they kind of stalled because they're only up 3% since March.
Yeah. Well, they had what was perceived to be a somewhat mixed quarter because they missed on their earnings, mainly because they acquired.
Okay.
So,
but I love TMO. They're a strong buy on the playlist.
Yeah.
And they got really good safety. They're a strong buy. Love. Not a recommendation, and past performance is
not indicative
of future results. So thanks for joining us, and we'll look forward to seeing you next Friday when I pick another 3 winners and go
so
wire
humble.
to wire.
Your humility is just
I have none. I have none.
Okay. All right. Have a great weekend, everyone. We'll see you next week.